Okay, good morning everybody. We made it to midweek already. It's Wednesday, August 15th. After being up yesterday, now we're back on the defensive. And we're down roughly around 4 cents in the wheat, 3 cents in the corn, down in the neighborhood of around 7 cents in the beans. After being up $9 in the meal, we're now down $3 in the meal, and now we're down 25 points in the soybean oil. Soybean oil never really gets a break as far as trying to get a bounce as far as it being on the defensive versus the meal. Having said that, I will say that the trade is very forceful with the meal versus the soybean oil trade in here. And that being in the sense that the open interest in the soybean meal yesterday was up 5,600 contracts, and the soybean oil was up roughly in the neighborhood of around 3,000 contracts. And like I said, we had the meal up around $9, the soybean oil down around 10 points. So the trade is very, very entrenched in that. And we still have the trade as of yesterday's close, which will be a reflection of the commitment of traders report on Friday. We still have the trade in the neighborhood of around net short 96,000 lots of soybean oil versus being long 46,000 meal. So that's something that we're just going to continue to monitor. The meal deliveries didn't hurt the meal spread. The meal deliveries didn't hurt the crush margins, and so you would think that when you had the USDA report come on out with this 700+ million bushel bean carry on out, and we had these strong crushing margins, that we would go and find out that we would have some meal supplies out on the street, but the trade still goes and wants to go and buy the meal versus the soybean oil, and we can't go and crack that code at this point. Other than that, not much news. We're going to have a NOPA crush that's going to come on out here later on this morning. They're still looking at a record crush number as far as 162 million bushels. They're looking at a little bit of an increase in soybean oil supplies as a result of the bigger crush, even though on the USDA report the soybean oil stocks came on down a little bit. But once again, the money flow still goes for the oil, for the meal versus the soybean oil. Other than that, we have our deliverable stocks that came out yesterday. We're still not running on out. We still have a weather situation that still has weather fronts coming through the Midwest. I would think that would still enhance the conditions as far as the corn and soybeans go going forward in here. That continues to go and enhance the fact that we had the USDA report that came on Friday this past week that shows that we have enough supplies around here in the U.S. and in the world, and it's money flow more than anything else around the defensive in the overnight trade. And how do you want to say it? The USDA goes through a bone out there to go and try and say we're going to have better demand going forward, but once again we got to chew through the supplies right now that we have as far as trying to go and get a bullish momentum going. Once again, these are my opinions, not that of ADM or ADMIS. Thank you.